Hello, everybody. This is Bob Anderson, and I want to do a video that talks about the sequence of strength for the moving averages and whatnot that I use in my charts and my trading. The reason I'm doing this with the last piece being the overnight open into the list is because I've just finally gotten that piece installed into the other three for our trading system. So I want to cover all four, and so just to summarize for those of you that don't know, we have what's called a 1 minute gold line, which is a 9 EMA off of 1 minute time frame data. We have a 5 minute gold line, which is a 9 EMA off of 5 minute time frame data. So it's a slower moving 9 EMA. We have a 5 minute red line, which is a 21 SMA off of a 5 minute data, and that's a even slower moving instrument. And then we have what's called the overnight open, which is my favorite trade, and I'll show you some examples of it today. But the overnight open, which is the 6 p.m. Eastern Standard Time opening price of that instrument from the night before. Because, the market closes for an hour and then it opens up and then bam, there's a price. That price carries itself throughout the whole day on my charts. And then I look for trades off of it. So quickly to talk about these four things, and then I'm going to show you in charts, okay, exactly what I'm talking about. But the overnight open is so I have D and M. D for direction, M for momentum. I look for trades off of all four of these, but the type of trade you're taking and how you manage the trades between all four of them differ by the fact that these two right here, the 5 minute 9 EMA and the 1 minute 9 EMA are momentum trades. So they need a lot of push, and they need a lot of reversal, cleaning out stops, whatnot, and then they need a break back in the direction that price is really trying to go. So these are momentum trades. They're not they're not as powerful on the chart, but so therefore the way the stops are handled on them and things like that, the way the targets are picked, are all indications that these are momentum style trades, not direction style trades. So a direction style trade is like our 5 minute red line and our overnight open. And as direction trades, you kind of give the trades a little bit more room to work, because you're anticipating the direction to come hit that line and then create that direction for a longer term style trade. Now, knowing that these are my trades, my system is making money over here. knowing these are directional trades, these are more powerful lines. So that's the thing I want to talk about last, is strength. 1 to 10, 10 being the strongest, 1 being the weakest. This is how I would rank them. 10, the overnight open is the most powerful of all these lines. I'm going to show you what I mean by that. Then you got the 5 minute red line, which is next. Then you got the 5 minute gold line, which is next. And then you got the 1 minute gold line. Momentum lines are not as powerful as directional lines. Okay. So what I'm going to do is I'm going to pull up, and I know I probably confused a bunch of people here, but I'm going to pull up an RTY chart today that depicts about 90% of what I'm talking about right here today. And then maybe I'll show you a gold today also. Okay, so hold on. Okay, so for discussion about what I'm talking about up here, this is what my chart looks like. All right, so what you have on here for conversational purposes is you have this red line here that moves, that creates a spot every 5 minutes. That's your 21 SMA right here, your 5 minute red line, which is a directional indicator. I use it in this respect. If I'm north of that price, then on my momentum trades, I'm looking for trades in the same direction that price is from that red line. So if price is north, like it is here, north of this 5 minute red line, I'm looking for longs on the 5 minute gold line and the 1 minute gold line. If I'm south of it, I'm looking for shorts, and I'm using this 5 minute red line as the place that I see the market being rejected, say to the north, if it's coming in from the top, into the south if it's coming in from the bottom. Okay, so it's a directional trader. Okay, and it really is a directional trader. It's a split in the market. Is the market going to be long? Is the market going to be short for an X amount of time until it runs out of energy and it rolls inside that 5 minute red line? Then you have, see, here's your 1 minute gold line. Here's your 5 minute gold line. Here's your 5 minute red line. This one big dash gold line down the middle, that's your overnight open. So that's the last piece to my system that I've gotten coded. So how does it work? Well, each one of these lines has rules as to what makes it a valid trade and what doesn't. The one with the least amount of rules, ironically, or not ironically, but is the 5 minute red line. That one really has the least amount of rules. But the overnight open has some pretty specific rules as to what makes a valid trade and what doesn't. And the 1 minute gold line has some pretty specific rules as to what makes it a valid trade. And so same with the 5 minute gold line. All of them, even the 5 minute red line, are looking for a break of the candle that's lowest and closest to the trigger line, a break of that candle in the direction of the market. So, perfect example. So here's our open right here. By the way, the market opens at 9:30. This is the RTY. The market opened at 9:30, plowed right through our overnight open. And here's something funny. Even at 9:40 in the morning, it slams up right into your overnight open. This is a very important line on your charts. I mean, I say it 50,000 times, but most people don't listen. And then wham, down it went. Okay. And then it slammed through up to the upside. You're creating new daily highs. By the way, here's your daily low from overnight. And then across the market, you go right back. You guys may have heard support becomes resistance, resistance becomes support. Okay. If you don't know what that means is you got a resistance line right here. Price comes up to it right here. Resistance. When price goes through it, it has a tendency a lot of times to come back and test that resistance to treat it now as support. And the same thing happens with these lines. Depending on what side of the line you're on, all of a sudden that side of the line starts working for you or against you. So we'll talk about that here in a second. That's why it's very important to know the strength of the lines you're trading off of. Because if the line you're trading off of has a more powerful line above it, let's say on a long, you're in trouble. You want to make sure you're taking a trade off of a line who is further up the strength bar than all the lines it's going to run into in the direction of your trade. Okay, I don't know if I'm making sense there, but so if you're going to take a 5-minute red line long, for example, you better not be taking it straight into the overnight open because you're going to get your head plowed off. Okay, you want to take those trades in the direction of weaker lines. So here's an example. Here's a perfect example. So down comes price, and here we are looking for these candles to settle on top of, this is a 1-minute chart, by the way. So each one of these candles is 1 minute. You're looking for price to settle on that overnight open, and then you're looking for a break of the top of the lowest candle's top in the direction of the market. So when this candle here, for example, this big green one, let's blow this up even more. When this green one here closed, and then this one was forming, you would have wanted your buy stop to be just above this candle's wick top, okay? If this candle closes even lower, but not on the opposite side of that overnight open, then you're going to want to follow it to the top of that candle when this one closes. And that's exactly what happened right here. The center of this diamond was a tick above this candle's close. So therefore, there was your entry when price shot up. So your entry was 1856.9 on the RTY. And the target on this one was 60 ticks for this instrument, for this trade type. And therefore, it hit, ironically, that 60 ticks was right below the daily high, which price blew right on through there. Anyways, and I talk about how to handle that in case that ever happens. But anyway, so now what are we looking for? Well, we're kind of looking for now. Oh, so here's the thing. Notice when we took this trade, this 1 minute gold line was above us. So no, let's talk about that. If the 1 minute gold line is above you, you have a tendency, price has a tendency to come and hit that 1 minute gold line and then and get some resistance because it's its own minor directional trade back down. Or if you come from the top and hit it, it's pushing it the other way. So the question is, was I concerned about that? Well, let's look at this for a second. See what happened? Price ran right up, hit that 1 minute
potential
gold
RTY
line,
5 gold line long.
and then it rotated back down, but it didn't have enough oomph in it. And then the second attempt, when it came up, boom, broke this candle, and then wham, it's gone. That was the only line of resistance in the direction of your trade from the overnight open to your target. At this point in time, the only one in the way was this 1 minute gold line. Okay, because the 5 minute gold line, and the 5 minute red line were still lagging from behind. Okay, they were still catching up from all the noise going on in the open. Okay, so then let's see what happened. Price goes up, creates a new daily high, plows right through that 1 minute gold line. So there was no setup there, even though price ran up. Now here's an interesting
potential RTY 5 gold line long.
Here's an interesting thing. Okay, it goes back up to the high of the day and has a nice smooth pullback into that gold line, and then boom, it went long again. But it's not a valid trade in my plan, purely because this top was not higher than this top. All it had to do was be a tick. All it had to do was be a tick through it, which it did not do. And then when it came down, we would have been looking for a long right here. But the system would have been looking for a long. I'd have been looking for a long. But because it did not tick through to the most recent high, then it's recognizing, the system's now recognizing, okay, that's resistance above us. We don't want to take a trade into newly created resistance where you've had a double top. The system actually recognizes that. I know that sounds kind of crazy, doesn't it? And guess what happened? Bam, it hit it and it rolled right over. Plowed right through it. Plowed right through your 5-minute gold line, which, by the way, there was no trigger trade on the 5-minute gold line for a couple reasons. Number one is this was a pivot right here. See this pivot that was created from here back to here? Well, this pullback right here, this candle right here, the bottom of that candle was lower than the bottom of that candle. No trade. Now, could it have reversed and gone back up? It could have, but I want to keep us out of potential bad trades. That's a sign of a potential bad trade. This is the pivot dots right here. See these dots that were created from this pivot spot when this rotated up, and this price pierced it right here by a couple ticks. So, okay, no trade. This is a momentum trade. 5-minute gold line, 1-minute gold line are momentum trades. When you break pivots on your pullback, you are showing signs that you are going to give up the momentum. So let's keep going forward. What happened next? Well, what happened next is we came down to our directional trader, which is the 5-minute red line. Remember what I said. The overnight open and the 5-minute red line are both directional traders. Now, so what happened? Well, holy crap. It did the same thing. It created a nice small candle right there on that 5-minute gold line. It's nice small candle. Long is the break of that candle to the long side. Wham. Here's your break even. Here's your target. So that one was, I think that one was 60 also. Yeah, that was another 60 ticker right there. So 60 ticks. Boom. Almost back to the daily high. Now, interestingly enough, look at this. This did not even reach the daily high. So we've been there 1, 2, 3 times. The third time slammed us all the way down back to our directional trade line. Our directional trade line. Interesting. Now, did that directional trade line confirm that this is the direction? It sure did. It confirmed all the way to this point right here. All the way to this point right here, because this did not pierce this. So what happened next? Plowed right through. Right through. I mean, honestly, once you start recognizing the sequence of events of the decision tree of price action, this stuff gets relatively patternish, I should say. Okay. So because this did not create a new pivot here, when it came down to that 5-minute red line again, after plowing through everything above it, because again, all the momentum trades are gone. Another thing is this system that I've created does not even look for these gold line trades anymore, because this right here was proof that this is going the other way. The momentum is gone. It actually recognizes these things. It recognizes that that pivot coming back to it is less than that pivot over there, and therefore momentum is not on our side. Okay? Plows right through those lines, doesn't even attempt to take this fake break right here. Doesn't even attempt it. The system does not even attempt that, because it recognizes this pivot. Even though this this pullback is smooth, it recognizes this pivot is not higher than this pivot right here. Okay? Now, what did it do next? Oh, shoot, I lost my screen. Hold on, I'm laughing. What did it do next? What did it do next? What did it do next? I'm going to tell you what it did next. God, I lost my screen here. Hold on. I'm laughing so much. What did it do next? It came back to our other directional line, which is the overnight open. What did it do? It created a nice candle that pierced, let me see if I can blow this thing up enough to see it. That pierced the overnight open by, hold on here. This is amazing stuff, what I'm about to show you. Pierced that overnight open by 1 tick. Created this consolidation hammer candle. Here's your entry. Bam. Where does it go? It goes all the way back up here for another 60 ticks. And here's what it did. Okay? So this is, let's talk. Remember, we talked about once you're trading into these lines, you got to have a more powerful place that you're leaving from. So going back to our strength, overnight open is a 10. 5-minute red line is somewhere below that. 5-minute gold line is somewhere below that. 1-minute gold line is somewhere below that. Okay? So let's go back and see what happened here. So here's our long off of the most powerful line on these charts. It ran right up into both. That's what these little numbers mean here. This T1 right here and this T1, both are the first touches on the bottom side, which means price is going to push down against you. Both are first touches on the bottom side of the 1-minute gold line and the 5-minute red line in this sequence. Okay, first touches. And what happened? They pushed it down. But you got to remember, we're on Mike Tyson's back over here. We're with the heavyweight champion back here. Okay, so what did the heavyweight champion do when he got punched in the face? He turned around and punched him back. Okay, because we're fighting with the bigger fighter. All right, because we went into the ring with the stronger line. And so what happened? Price came up here and hit this line again from coming down here, hit this line again, and then wham, off it went. It almost hit our target way over here. Missed our target by about, let's see here. Missed our target by 5 ticks. And then kind of rolled around on top of these lines now, and then wham, finally hit. So that is where these lines show the power that they bring to the table, and you need to know which one you're playing off of and what to expect out of that line based off of where you're taking a trade from, what's ahead of you. Am I entering a trade off of, say, the 5-minute gold line, and I got the 5-minute red line above me? I got a problem. Am I taking a trade off any of these lines, long, for example, and I'm running into the overnight open? I got a problem. Okay? Because I'm going into the ring with a boxer that's probably 50 pounds underweight of the guy that I'm going to fight. And that normally isn't going to work out too well for you. So, anyways, this is an absolutely perfect example today. This is today. This is December 7th of exactly what the system is looking for and what these lines mean. And if, folks, look at the reversals. Reversal right here. Reversal right here. Reversal right here. That's not magic. That's not magic. That's literally not magic. Okay? Those are pinpoint spots that these reversals happened. And it all happened after 10 o'clock. After all the reindeer game BS is done with the market going wing, 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 and the news being over and all that. Now you can sit there and see if the market gets into rhythm, and you can take advantage of that rhythm because you know the strength of the lines and you know how to read that rhythm. That's exactly it. So I'm going to show you just quickly gold. I'm not a gold trader, but it's interesting because gold basically does, I mean, I shouldn't say basically, it does the same thing. So today gold had look at this. I didn't even set this thing up for trades, but let's just look at this. So gold has opens what at like 820 or something like that. So gold slams down into the 5 minute red line and then wham, takes off. Okay. Now I'm not saying you would be taking this trade at 8:30 when it opens up at 8:20, but let's talk about it as it starts getting into rhythm. Okay. So then it rings down, blows right through your 5 minute red line, comes back up, sits inside it, boom, boom. Let me tell you something. If you are trading in the direction of the overnight open because you have room to take the trades and the risk and that kind of stuff, and the trade and price isn't coming off of the overnight open to you, but instead you are rotating in to a trade towards that overnight open, that's exactly where they're going with it then. Not sure I made sense there, so let me say that again slower. You don't want to be battling the overnight open when price is coming from the overnight open to the moving averages. But if price is rotating inside your moving averages back towards the overnight open, those are great trades because they're bringing it back to the overnight open. So here they did that. They went right back into the overnight open. You had these candles consolidate. Bam was your long. Up it went. Down you got knocked out. And you lost $70 on this trade. Lost $70 on that trade. But here's the interesting part. If you just stayed below the pivots, the darn thing ultimately works. Now, let's talk about the afternoon. What happens in the afternoon? Price comes running up, hits that 5 minute red line, does not break down to the lower side. We talk about that. These first touches, that's a T1. Those first touches, you're looking for it to come in and then reject because this is a directional line. Okay. Reason I'm showing you this is just to show you some of these rhythms still stay no matter what instrument you're talking about, because look at this. It just blows right through all these lines. This is your overnight open. Creates a new recent high, rolls right back into your overnight open. Bam. Once again, here's your hammer candle. Here's your entry. There you go. $500. I mean, anyways, that's the power of the overnight open. I wanted to show you that because that is, again, my favorite trade. The system is looking for entries off for the overnight open when the market is showing that it's not trading in consolidation around the overnight open. Crossovers and retests, those are my favorite. That's exactly what the RTY did on the first overnight open. It did a crossover, retest, gone. If you remember in that RTY example that I showed earlier, it did the same. It did the same thing at 9 in the morning or 9:15 in the morning. 9:30 when the market opened. It crossover right up into the overnight open, tested it, wham, down. Then the one I actually got involved in was the one where it blew back through, came back over, tested it, gone. This exact pattern right here. From the daily low, across, the overnight open, down, bam. And this system is looking for those exact setups right there. Anyways, I hope everybody has a good day. I'm sorry I haven't done a video in a while. I had coronavirus last week for a whole week. I still got frog in my throat, but I'm getting over it. I hope everybody has a good day. Talk to you later. Bye.